Shark has a lot of fish, but shark does not always use it all. What if shark keeps the fish at home? It does not multiply, and it is not safe. There are thieves, fires, wife buys new clothes, all stupid risks. So shark takes the fish to the bank. The bank says, "Let me hold your fish, I will pay you extra fish every year." Shark is happy, doing nothing and still making money. But the bank does not keep the fish in a vault. The bank lends that fish to other people. Borrowers use the fish to do business. If business goes well, they pay the bank back. Principal and interest. The bank gets more fish, shares some of that extra fish with shark, and calls it interest. So how does the bank survive? On the spread in the middle. The bank pays shark less fish, lends other people more fish. That difference is the bank's profit. But the bank has risk too. Borrowers can go bankrupt. They do not pay the fish back. If too many people do not pay, the bank dies. That is why the bank does not lend blindly. The bank chooses people, checks reputation, checks ability to repay. The more careful the bank is, the lower the interest, but it lives longer. The more aggressive the bank is, the higher the interest, but it dies faster. When shark deposits fish in the bank, shark accepts indirect risk. Do not deposit, the fish does not grow. Deposit, the fish might grow, but no guarantee. When people trust the bank is strong. When people panic and rush to pull out their fish, the bank collapses. A bank does not die because it runs out of fish, it dies because it runs out of trust. That is why Poseidon stands behind the bank. Guarantees it can operate. Prints more shells when needed, just to keep public confidence alive. But the bank does not just lend fish. The bank invests. The bank sees places where fish can multiply. Fish farms, fish transportation routes, technology that helps fish grow faster. The bank puts fish into those places, lends it out, then demands the fish back on time. Of course, investing means accepting the risk of losing fish. The bank buys shares in fish farms. If the farm grows well, the fish increase big. If the farm performs poorly, the fish are lost. So why does the bank still invest? Because safe lending brings very low returns. To earn more, you have to accept more risk. But the bank is not stupid. The bank does not dump all its fish in one place. The bank spreads the fish across many places. One place dies, another place lives. The bank has teams that measure risk. They do not ask, how much do we make? They ask, if we lose, how much do we lose? The bank uses shark's fish to lend out. Small profit but stable. The bank uses its own fish to take bigger risks. If it wins, the bank keeps more. If it loses, the bank eats the loss. That is why banks are tightly regulated. When banks invest well, the whole ocean gets stronger. There are jobs. There is production. There are new fish. When banks invest stupidly, risk spreads through the whole system. One bank falls, drags others down. Trust collapses. Money disappears. That is why banks are both the backbone and the weak spot of the economy. When shark deposits fish in the bank, it is not just letting others borrow it. Shark is letting the bank decide the future of that fish. The bank is not evil. The bank is a tool. Use it right, it grows the value of the fish. Use it wrong, the ocean dies. Bottom line, putting fish in the bank means sending the fish to work. Low return, low risk. If shark wants bigger returns, shark has to accept bigger risk. The bank does not make shark rich. The bank makes sure shark does not get poorer. A smart shark understands one thing. A bank is not a safe. A bank is a risk machine. That machine can feed the whole ocean or kill it. Shark is all of us. The end. Do not forget to subscribe to the channel.